Hi, people. This is Khyati Mashru Vasani again with you. Well, last time we spoke about rebooting your financial life, and we'll continue our conversation on the same lines today. First and foremost, I would like to tell you that modern day slaves are not in chains, they are in debts. They are in EMI. इनफैक्ट आई एम श्योर आप सब लोगों ने सुना होगा कि EMI is the one thing that actually steals a lot of dreams. Or probably a lot of dreams don't come true just because of the EMI pressure. So today we're going to learn about the secrets of building a pipeline. But before we get on to secrets of building a pipeline, first we need to understand what are the possible leakages and how actually can we fix these leakages on the pipeline. Well, so to explain you the leakages, I'm going to use something called as international financial pyramid. This is something which was developed internationally, and we all know that pyramid lasts for many years just because the base of the pyramid is very strong. Similarly, when it comes to your finances, it is important that the base of your financial pyramid has to be very, very strong. Only then your financial life can sustain onto that pyramid for rest of your life. So let us understand, as you see it in the picture, let us understand what is the base of the pyramid. The base of the pyramid is protection. When I talk about protection, what all is included in the protection, we will talk about that. However, this is something like, if you're buying a land, you will obviously ensure that the land is fenced. If you're buying a home and, you do it up wonderfully the way you wanted, you'll make it like your dream home. But we'll ensure to buy the best quality lock for the home just to ensure that, it's protected, to ensure that it's safe. It's similar when it comes to your finances. Base of the financial pyramid is protection. So let's see what comes under protection when you talk about international financial pyramid. First thing in international financial pyramid in protection is term life insurance. Not just having life insurance, but having adequate amount of life insurance is very, very important. Like a lot of people that I meet tell me that I have sufficient life insurance. But it is important to ensure that it is equivalent amounts of all the financial responsibilities that you have. Man is nothing but a money-making machine. And that is the reason all of us who are working have a human life value. And it's important for you to buy your insurance according to your human life value. Second important thing in protection is having enough of medical insurance. And understand one thing, that medical insurance is not something that you're going to use it today. It's something that you're going to use it 20, 30 years later. So when you are buying a medical insurance, buy keeping in mind that you're going to need it later. Buy it for an adequate amount. Even if you have a corporate insurance cover from your company, make sure that you have your own medical insurance. Trust me, it's an asset and not a liability. It's something that's going to protect the assets that you are going to build over a period of time. Even if you have a company insurance, don't ignore buying a medical insurance. Another important thing is reducing your debts. The best way to reduce your debt is using a snowball method. So snowball method is where you just jot down all the debts, all the EMIs, all the loans that you have, go on attacking each and every debt individually. First attack the smallest of the debts and then go to the biggest debt. So maybe you can say that, okay, for next 2 years, I'm going to just pay off my car loan, which is 4.5 lakhs. I'm just giving an example. Maybe later on you can think about another education loan that you have. Then you can think about the housing loan that you have. So use the snowball method and go on killing, one by one, go on killing all your debts that you have in your portfolio. Fourth important thing is writing a will or appointing a financial guardian if you have kid who's below 18. People tell me that we don't really have a lot of assets. We don't really have a lot of money. Why do I need to write a will? But it is very, very important. Because if you don't have a will and if you die intested means without writing a will, there is a possibility that, the entire money that you have planned for your family can be questioned, even if you have appointed a nominee. And if that happens, as per Hindu succession law or as per Indian succession law, the law of land is applicable in that case. So whatever applies according to that law will be done with your money and not the way you wanted it with your money. So don't ignore this, please. And another very important thing is having enough of emergency fund in your portfolio. Ideally, if you're in a very stable job, if both of you are working in a family, then 3 months of your expenses should be enough. But if unstable job, there is a complete dependency on you, then look at 6 months of your expenses as your emergency fund. It's ideal to not keep your emergency fund in your bank account. Out of sight is out of mind. Try to keep it in FD or simple liquid fund. That's basically any instrument which can be liquidated, and you should get the money in 24 hours. Why do you build this base? Is before you get on to make your financial pyramid, if your base is very strong, it will protect the assets that you're building, in the due course of time. So it is very, very important that first you work on your base. The second part of the pyramid, as you see it in the diagram here, is the regular savings. Regular savings is from protection, you move on to basic minimum kind of a return. Okay. And that is like some of your non-negotiable goals. Like I might say that your child's education is a non-negotiable goal. It's very certain. The timing of that is also certain, irrespective of market, interest rate, COVID, your health, your job, irrespective, that has to happen. So a part of that goal can be planned from less risky investments. And then another part of that goal, maybe another 50% of that goal can be planned into a little high risk kind of an instrument. So that, when the goal is maturing, at least irrespective of the situation, you have some bit of money certainly coming to you for you to take care of the goal. So after protection, moving to low risk, then you can move into growth and diversification through your mutual funds, ETFs, stocks, bonds. Then you move on to high growth. Rather than high growth, I would say speculation, where money makes money for you, but at the same time, you're just speculating. So you might make more money, but at the same time, you might even lose more money. But when you have fixed your 3 financial goals well, when you fix 3 parts of your pyramid well, you don't really need to worry about it, or you don't really even need to worry about the loss you're making, because you have planned well for your most important financial goals. And after speculation, of course, the important thing that comes on is wealth distribution, where whatever money you have made, you are passing it on to your next generation. And, in turn, they carry on your wealth. So this is about financial pyramid. Now, coming back to leakages, first thing, you need to fix up the base of your financial pyramid. Another important thing is you need to understand your debt quotient. Debt quotient is what is the amount of debt you have versus your assets. So let's say if your assets are 10 crore, but my loan on that is 7 crores. So my debt to asset ratio is 70-30, which means 70% of the asset that I have, it's still on loan. So that means my debt to asset ratio is very poor. I need to first work on fixing my debt to asset ratio. Another important thing is understanding my savings ratio. What is the net percentage of money that you are saving? It's very, very important. You might be earning 5 lakhs, but if you're saving 50,000, your savings ratio is only 10%. And let's say there is a family who's earning 3 lakhs, but they are able to save 1,50,000. Their savings ratio is 50%. So this family who's earning 3 lakhs is better than the one earning 5 lakhs, because the savings ratio of family earning lesser is much better. So they will reach their goals much faster as compared to the family who's earning more money. Another important thing you need to know to fix your leakage is your dependency quotient. How many people are dependent on you? If there are a lot of people who are dependent on single income, then you need to have your risk appetite accordingly. you need to plan your investments accordingly. You don't have any dependents, you don't have too many dependents, your spouse is also working, then that's fine. The dependency is less on you, so you can afford to take a little higher risk. And last is just understanding about your inheritance. People tell me that, they want to invest in real estate. Real estate certainly has to be a part of your portfolio. But at the same time, if your family traditionally has been investing in real estate, and if you're going to be inheriting those properties, then maybe you need to think on that and then according to that plan your current investments. So today we spoke on understanding the leakages of building your pipeline. So I'll quickly recap. We spoke about your protection quotient, and through protection quotient, we spoke about building your financial pyramid. We spoke about understanding your saving quotient or a saving ratio. We spoke about understanding your debt quotient, understanding your dependency quotient, and understanding your inheritance quotient. So these are the things which can cause a possible leakage. So before you start building your pipeline, think on these things and fix these leakages. Next video, we're going to talk about the secrets of building a pipeline. Till then, stay safe and take care. See you soon.